Welcome back to the Make It Count podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
And I'm Tyler Warner, small business owner with a lot of accounting questions. In this episode, we're talking about how to prepare for filing your taxes.
Yeah.
Right? Yeah.
Yeah, specifically individuals. So kind of going to walk through, we're at January 19th. Excuse me. And so just be thinking about what's coming. So a lot of things, I would say, coming in the mail, but you probably got some things coming electronically via email.
And you've lived long enough to know it's coming.
Correct.
And you got to do it.
Yeah, links to download information. We're going to walk through kind of what you should do.
Oh, gotcha. You mean from your firm?
Well, no, not necessarily from my firm. From your employer, from your brokerage account.
Gotcha.
Like, so you not take away you being a client of ours, just as you as an individual tax person, like individual person who has to file a tax return. You've got some information coming, and I want to give you some tips of what's coming, what to look out for, things you might need to request, things you might have forgotten about.
Car commercials are about to start changing.
Oh god, yeah. They're going away from the get immediate tax write-off, buy your big SUV, that sort of thing.
Yeah.
And then they're going to the TurboTax Live and all that kind of stuff. God, it makes me think about when the Super Bowl is happening. It's all tax, not all, but a lot of do your taxes, H&R Block online. It's easy.
It used to be just web design commercials for a while.
Really?
There. So that's when I saw the writing on the wall. When it was like, wow, there was 3 how to build a website.
You're like, I need a transition.
Yeah, exactly.
All right, so here's some practical tips as you start thinking about, okay, I got my tax return to file. Start thinking through your year. And what I mean by that is, obviously the big things, if you had a child, you got married, got divorced, those kind of big life events. But just one I put on here is, did you take money out of retirement? A lot of people, sometimes it happens. You lose a job. So just be thinking through, excuse me, because the more you can tell your tax preparer about your situation, the better the questions they can ask you to lead you into the documents or information they need.
Gotcha.
So a lot of this is just saying, hey, guy or gal that's filing my taxes, here's what happened last year. And maybe their questionnaire leads you into that. Like a lot of people use digital questionnaires and organizers. But if not, just to start to tell them oh yeah, I went back to work. Like maybe your spouse went back to work and now we had to put the kids in daycare or summer camp. Those are relevant points of information, even though you as the taxpayer may not know the tax relevance. They hold tax significance, and we're going to talk about that in a second.
Yeah, gotcha. All right, well, let's dive in. So that's kind of the first point. Think through the year, look at your calendar.
Yeah, when best things I would say are money out of retirement, big transactions, kids in school, kids not in school, kids at daycare, kids at summer camp, who worked, who didn't, that sort of thing. Yeah. Big life events. Did you have a new child?
Even take out an actual calendar. I mean, I've done that not for tax purposes, but just I think me and my wife the other day were just looking at what do we do each month?
Yeah.
And it was really interesting.
Yep.
So
second point I would say is, so you're starting to think through a year. One thing that I get all the time, inevitably when people hear we're a CPA firm, so everybody immediately goes to taxes, which I'm always trying to dispel that myth. We do taxes.
We want the
loopholes, we do taxes as a piece of the equation, but everybody's like, oh, you do taxes. And they're like, okay, so my brother-in-law, it's always, or my cousin, his CPA said, and it's all these tax strategies. And most of them are myths. And what I want to say is sometimes and oftentimes, the best tax strategy is just being organized.
Wow.
Meaning, have your information readily available for your tax preparer. Know the things they need such that you're not dependent upon their questions to farm it out of you.
Yeah.
So, have your documents in order. We talked about the summer camps and the daycare and the charitable contributions and the tax payments you made that may a property tax payment that may or may not be on a tax form. Start to understand that.
I think that's huge. You need to print that everywhere. But I mean, that's every story I've heard you tell of these, oh man, they overpaid their taxes or they got taxed too much, whatever.
Yeah.
I guess it all ends up being they overpaid. But it was all because you didn't know some piece of information when you needed to know it.
Right.
And that's kind of your whole point is if you're organized, the data will tell all that story if it's there in the numbers. And if,
Well, and also want to make the point of most people, especially if you're like a W-2 kind of earner, you don't have a business, and even if you do have a business, there's not some magical tax bullet. I think everybody was watching, they're getting all their information from social media, quite honestly, and TikTok and stuff on Instagram. It's like, yes, there are tax strategies. I'm not like diminishing that idea. But for most people, and even the people who have tax strategies, sometimes it's not as good as you think.
Yeah.
Because it's complicated and a lot of it's like, is the juice worth the squeeze kind of thing? It's expensive for these strategies. But for most people, just being organized is like 90% of it.
Yeah.
You're missing out on things not because you didn't know the latest tax strategy. It's because you didn't know that you had to claim, or that you sent your kid to a summer camp and you could claim that for the child dependent care credit.
Right.
So just,
But yeah, if you didn't have summer camp in your books, you know what I
Exactly.
mean, then it doesn't flag and it doesn't come up.
Yeah. So just be organized, have your information ready, be thinking through your year. You're already off to a good start.
Yeah. Gotcha.
Okay. So let's talk about the documents that are going to be coming by the end of January. So by law, they say you're supposed to issue your W-2s to your employees, your 1099s, all that kind of information by January 31st. So just be thinking.
Who's they? The IRS?
No, whoever's the issuer.
Oh, okay.
So like if I'm your employer, I'm supposed to give you your W-2
Right.
by January 31st.
Gotcha.
And I say by law, I'm not even sure what happens if you don't, but everybody's doing that.
You don't want to find out.
You don't
That's
want
why
to find
they've disappeared.
We don't know about it.
Yeah.
We can't talk to
Yeah,
them.
exactly.
So W-2s, your 1099, so that would be your 1099s like from your bank account, which I'm saying that kind of laughing, like not many people are getting that much interest on their bank account anymore under the old interest rates. But, if you got 1099s from a savings account, or you getting dividends from a certain account, or you've got your brokerage account, like a taxable, not your retirement, but like you started a TD Ameritrade account and you're trading in there and you might have some dividends or some capital gains, like that stuff's starting to come, which also should kind of, back to our first point, be thinking one of the life things that happened. Oh, I started a brokerage account.
Yeah.
That's a life event.
Yeah.
I put 20 grand into a Ameritrade account.
Yeah, and I think we forget, because those things are so accessible now. Like, they're so self-serve that, like, I've done that before. I'm like, oh, yeah, I did. I forgot I started a new, whole new brokerage account.
Correct. And how would your tax preparer know that?
Yeah.
And also, I would say, too, this is a good and a bad of the digital age, which I love everything digital. What happens when you start one of those accounts? What are the first things? One of the first things they ask you is, do you want to opt into e-statements? So a lot of times tax documents prompt you because they come in the mail, and the envelope says, I'm sure you've seen this, important tax information enclosed.
Yeah.
When you
I ignore all mail.
Yeah, well, that's you. When you opt into, you give it to your wife.
Yeah.
When you
She ignores it too.
Yeah, well, yeah, that's
No
true.
one's checking our mail.
That's true. When you opt into the e-statements, and then and it's something that you did on a whim, which a lot of us have done. Like, I've had clients be like, I just put 30 grand in this account because somebody gave me a great stock tip, and I had a buddy story. He was like, I got this buddy, he's telling me the airlines are really about to pop.
Yeah.
So I put 50 grand into TD Ameritrade. I was buying like United Airlines. I'm like, it's a terrible idea. But
Yeah.
anyway, that's one of those things. He told me that. I literally went in his file, like on our in our documents, I like put like a notepad note, ask for TD Ameritrade tonight, because I know he's not going to do it.
Yeah.
So again, like, you get e-statements, you do this on a whim. You're not even thinking, I bought and sold a stock and lost money or made money or I got dividends. Like, it's just, then what happens? You get that, you file your return, you didn't report that, you get an IRS notice. Like, it's just the downward spiral. Again, be organized. Shoot, send your CPA an email. Text them, hey, I started a TD Ameritrade account. Just put that on file.
Yeah.
They'll put it, I know this, I look at, people tell me they change their address. I can't put it in the tax software because I don't have that year's tax software yet. I literally just go make a notepad note, put it in their file, change address to 123 Main Street, done.
Yeah.
I don't have to remember it.
Yeah.
That honestly might be the best point. Just send your CPA an email. Hey, I did this. Just ask me about it later.
Yeah, just have it on file.
Yeah. So just be thinking through those things. What's coming? What's what you need to be looking for.
Yeah, the basic documents you need.
Yeah.
Okay.
I think I said 1099s. A 1098 is your mortgage interest statement. Obviously, that's generally mailed to you, but sometimes not. Sometimes it comes, with an email that you maybe goes to spam. So just be looking out for those kind of things.
Gotcha. All right, number 4, receipts that could be delayed.
Okay, so think about it this way. if you give to your church or a nonprofit, depending upon the size of that church or nonprofit and their level of back office support administratively, you're at their mercy of them sending that receipt saying what you gave during the year. Now, they're supposed to send it by the end of the month, but if they are a small church with a time secretary whose job is it to issue the tithe statements at the end of the year, they could miss it. They could forget. They could be delayed. It's a small organization. So again, back to those life events. If you gave monthly to a church or Food for the Hungry or K-Love or St. Jude, look at your credit card statement or anything on auto draft that you're not even thinking about. Or this, it happened to us a couple years ago. I remember we signed up for this Food for the Hungry thing, and it's one of those things where once you do it, you don't want to turn it off.
Yeah.
You're like, okay, we've committed to giving $40 a month. We're going to do this. 3 years later, you forget you're doing it, and then you look at your credit card statement and say, "Were we deducting that?" I don't even remember getting a statement. So what I did was I put a note in my own tax file. It was like some random Tuesday in July.
Yeah.
Remember we were giving $40 a month, which is $480 a year to Food for the Hungry. They may not send me a receipt.
Gotcha. So there's two parts here. One, recognize that it needs to be
correct
noted so as a donation.
Right.
But also you have to have a receipt to verify that.
Yeah.
The receipt you don't turn into the IRS. You just need to have it.
Correct. You need the receipt to substantiate, and I even have a note here. Your receipt, specifically for charitable, needs to have this magic language, which is no goods or services were received in exchange.
Gotcha.
You'll even notice a lot of churches will say the only thing you got was intangible religious benefits. You ever seen that? Mm-hmm. And so what they're saying is that's called the quid pro quo rules. So in the charitable world, if I give you $5,000, if you give me something of value back, think of it like a silent auction. I bought a $5,000 painting at your auction, you being the nonprofit. Mm-hmm. But that painting's worth $2,000. Well, my charitable donation is not $5,000, it's $3,000.
I see.
That's the quid pro quo. Did you get something back? You can only deduct what you got back, what you gave over and above the value you received in return.
Right.
So for a church, they're saying, well, we gave you some benefits, but admittedly they're intangible religious benefits, which in the tax world have zero value.
Yeah.
So my point in all that is be darn sure that your receipt has that language.
Gotcha.
The reason is because the IRS has come back in case law and said, hey, we're auditing you, Tyler. We see that you gave to a charity. We won't even argue that you gave to the charity. What we'll say is, we're not sure you didn't get anything in return, and we're disallowing the deduction.
Wow.
So just have that on file that says, I got nothing in return and you're good.
Yeah.
Also, I would note on charitable and smaller organizations, maybe your address isn't correct, maybe you moved. Just be aware. Again, thinking through, I was giving to this charity. Maybe they mailed you a receipt and went to your old address, and maybe you're outside the 6-month window of your email, your mail getting forwarded. I don't know.
Right.
Again, just goes back to thinking through what you did throughout the year and what you should expect, and just communicate that.
Right.
Yep.
Okay. A couple other things on this list.
Yep.
Childcare and summer camps. You kind of alluded to that earlier.
Yeah.
So another thing to just investigate.
Yeah. So this is the backdrop of this is both spouses have to work, because what we're talking about is the child and dependent care credit. Child and dependent care credit is available for expenses you pay, generally for daycare or pre-K, but summer camps also qualify. Now, they qualify for a federal credit. Those amounts and they're limited to the amount you spend, but the credit is limited to the earnings of the lesser earning spouse. So the thinking is, we're not going to give you a credit if you're a stay-at-home mom or dad, right?
Sure.
Because you could have just watched them. But if you both work, we'll give you a credit to the extent of the lesser earning spouse, which generally is going to be more than what you paid to the summer camp or the daycare. The takeaway here is you send your kids to summer camp, not overnight camps, but like the day camps.
Yeah.
Like just name your day camp.
Sure.
Or daycare. Have those receipts. You need to know how much you paid, the name of the organization you paid it to, pretty easy, their address, and their tax ID number. Very important, because you have to report that when you file your tax return, when you file what's called Form 2441, Child Independent Care Credit, you have to disclose that information.
Gotcha. All right, that's pretty straightforward.
Yeah, it's easy.
All right, there's one here for Louisiana residents.
Louisiana residents, there's a Louisiana school deduction. So if you send your kids, and this generally relates to private school, but it also relates to a certain extent to public schools, you get up to $5,000 for tuition, fees, books, supplies, uniforms, all that kind of stuff. But a lot of times that's not something that the schools are have to send out to you. That's something you'll have to request. So again, life event. Was my son going to public school and then in August switched to the local private school? You need to be thinking, is there anything there? Again, email your CPA in August. Hey, Tyler, Tyler, my son, he started at the local Catholic school. Mm-hmm. Is there anything I need to do with that? If I'm your CPA, I'm making a note in my file, ask them about the tuition statement. So again, just that communication, just be thinking through, but you get up to $5,000 for school expenses, which, like I mentioned, I rattled them off.
Gotcha.
All right. So let's talk about some things you can do after year end, right? So most people, once the tax year is done, it's done. You can't do anything.
Books are closed.
But
okay.
You can
pry them back open.
That's right. You can look back.
Gotcha.
Yeah. You can make IRA contributions that would be deductible for the prior year, or HSA contributions, HSA being a health savings account. So couple things. IRA, this would be a traditional IRA, right? So this would be where you put the money in, you get a deduction, and later in life, when you pull it out, you get taxed. If you listen to the last episode, we talked a lot about retirement accounts. That's what we're talking about. So you could put up to $6,000 in a traditional IRA, $7,000, and this is per person, husband and wife or taxpayer and spouse, $7,000 if you're over 50, what's called a catch-up contribution. Now, that's subject to certain limits. Once you start making over a certain amount and or you're in a retirement plan like at work, those limits start to get phased out to where you can still put money in a traditional IRA, but it wouldn't be deductible. Mm-hmm. So there's just certain things to think through. But the point here is there's things you can do for the prior year after the year end. Now, these have to be done by April 15th. So that would be your IRA, health savings account. So a health savings account, quick backup on that or information is health savings account presumes to be able to contribute to a health savings account, you have to have a high deductible health plan. And that's determined. Generally, you should ask your insurance provider, hey, what is my plan HSA compliant? And if it is, you can make tax deductible contributions to a health savings account. Then you use that money to pay for or reimburse yourself for out-of-pocket medical expenses. It's an awesome tool. And a lot of clients use this and they do this exactly what I'm talking about. They'll get in January, February, March, and they'll make the contribution for the prior year. The limits are as follows: $3,650 for a single person, $7,300 for a family. You get an extra $1,000 if you're over 55. So just something to be thinking about. Like a lot of times people ask me again, I think people think taxes have these magic bullet and that all the rich people have all the loopholes. That's what they've been told. Sometimes you just take advantage of the low-hanging fruit. Mm-hmm. IRAs and health savings accounts, retirement plan contributions. Very simple, not sexy, but do this over time, you'll be in a really great shape.
Yeah, like most things in life.
right. Not sexy, you just be disciplined, do them over time. Yeah, I agree. All
right, last point here, thinking ahead to 2023.
Yeah, what I would say is, and this is not gonna resonate so much with people who don't have a small business, but what I would say is when you're thinking through how to pay your taxes, withholding is always better than paying quarterly. So let me kind of give you some background what I mean by that. I'll give you my example. I have a CPA firm, obviously. I'm an employee of the CPA firm. I get a W-2 paycheck, but my income is not solely from that. My income is two things. It's the W-2 I receive, but it's also my share of the net income from the company. Okay, so my tax liability is on the sum of those two things. I set my withholding from my paycheck such that it covers the tax on all of that income. Mm-hmm. Now, why is that important? It's important because you're supposed to pay your taxes quarterly throughout the year if you're self-employed, or anybody really. The taxes are a pay-as-you-go system. And withholding, when you withhold, it's deemed to be ratable throughout the year. So here's my point. you could pay quarterly, but let's just say you miss it, you miss a quarter, or you don't pay exactly what you should, you didn't estimate properly. That's a snapshot in time. Like you paid on June 15th, that's when you paid it. But let's just say I took a $50,000 bonus on the last day of the year and I withheld the whole paycheck. I just said, make it federal withholding. That is all deemed to be done ratably throughout the year. Why is that important? Because the estimated tax penalty is running on what did you pay quarterly. Well, now if I withheld, $48,000 on December 31st, it's like I withheld 12 in the first quarter, the second quarter, the third quarter, and the fourth quarter. Versus what if I just made tax payments of 12 on April 15th, June 15th, September 15th, January 15th.
Gotcha.
My point I'm saying is, if you are self-employed and you have the ability to take a W-2 salary, to manage your taxes, a lot of times it's better to just have withholding from your paycheck than to try to pay quarterly. Because you can do it in such a way where you don't pay the underpayment penalty, which a lot of people do because they mess up their estimates.
Gotcha.
So just long story short to say, if you can and you're self-employed, the best way to pay your taxes is through withholding because you get to kind of game the system a little bit. If you mess up, you can go later in the year and take more withholding, and it's deemed to be done ratably throughout the year.
Gotcha.
Yeah.
Okay.
Is that about as clear as mud?
Yeah. Work with a CPA.
Yeah, I think the point there is just be thinking through if you're self-employed and you can take a W-2, your withholding is your friend in that example.
Gotcha.
Yeah.
All right. Well, man, this has kind of been quite the punch list of things to consider whenever you're preparing for your taxes and working with somebody. But yeah, I just want to kind of end it with that. I think the organization is the best tax strategy. I think if you can glean anything from this episode, it's that. Take that and run with it.
Yep, absolutely.
It's pretty fundamental. So, yeah, as always, you can go to Mire.group, find more episodes there, and certainly reach out to Marcus and his team from there as well.
All right, guys. See you next time.
Until next time. Bye.